Well, hi everyone, Sean Humphreys here. Welcome to All Things Retirement. In this installment, we're going to talk about one of the main risks that retirees need to deal with as they transition into retirement. Some of the risks that come up are inflation proofing their income streams so they don't lose purchasing power, dealing with market risk, and dealing with longevity risk. So what we're going to do today is I'm going to talk about how you can model your ability to deal with longevity risk in your financial plan. So I'm going to show you a sample of how we do that with the retirement income plans that we develop for folks. Now, if you're new to this channel, make sure you hit the subscribe button. We're posting content all the time on various aspects of retirement planning and wealth planning. So if you don't want to miss future content, make sure you hit the subscribe button. Okay, so what you see in front of you right now is a chart from one of the retirement income planning reports that we generate, one of the formats. Now, if you're interested in getting a retirement income planning report, there's a link with this video that will take you to a page on our website that goes over the planning report, how you can grab hold of one of your own plans so you can begin modeling the impact of various risks in your retirement planning. Like I said, inflation risk, market risk, longevity risk are three key ones. Now, when you look at this chart, you can see here this blue line that cuts across over time. And what this blue line is showing you is the after-tax income that the family wants to generate. Now, the number here is not critical. Every situation is different. Not everyone has a need for this level of after-tax income. Could be lower, could be higher. But you can see here that leading up to retirement, they're saving money, paying down debt, so their discretionary after-tax cash flow is lower. And then you can see that when they get to retirement at age 65, they're spending at about $114,000 per year net of tax. So again, the number's not important. It's more just to illustrate how we use these financial plans. Now, once you retire, we're indexing this income stream at 2% every year to cope with inflationary pressures. Now, inflation is always an evolving number. When we put this report together a while ago, we used a 2% inflation rate to model it. Now, the other thing that you see here is that we're using age 95 in this analysis. And so what the clients wanted to find out is if they spent at a certain rate, would they have sufficient money in addition to their pensions and government benefits and financial assets? Could they spend at that rate through to age 95 and not run out of capital? And this chart looks like they can do that. If there was deficits, that would show up as a red bar on the chart. Now, this chart that comes from the retirement income planning report is the assets. The black is real estate, and then the blue and green are financial assets. And you can see that the assets slowly go down over time so that theoretically that capital is fully depleted. Now, what we know in talking to these clients is they wanted to leave some legacy assets and buffer. So they didn't need this level of after-tax income. They're more concerned about how much they could spend at an upper level. And we did another plan that reduced the after-tax spend to see how the balance sheet would be impacted. And then the last thing that the retirement income planning report does, it gives you a breakdown of where the income is coming from. In this example, the income is being funded from various sources. The green is their RSP RIF money. The orange here is from their pensions. The black here is from old age security benefits, and the blue. So the report gives you some really good detail about how you're tracking. So if you want to find out in your own planning whether you can deal with longevity risk or other key risks that retirees need to factor into their planning, make sure you visit the page on our website on the retirement income plan. There's again a link that will take you there. And if you are new to our channel, make sure you hit the subscribe button so you can get future content that we produce on a regular basis. All the best in your retirement and wealth planning.